Hey everyone, welcome back. Today we're going to dive into the world of Universa Investments, a firm that's been called everything from brilliant to downright bizarre. They're known for their Black Swan investment strategy, which basically means they're betting on those rare catastrophic events that send shockwaves through the financial markets. Think of them as the financial world's doomsday preppers, always ready for the worst-case scenario. Now, before you think they're just a bunch of pessimists, consider this. During the COVID-19 pandemic, when most investors were running for the hills, Universa reportedly made a staggering 3,612% return. So how did they do it? What's the secret sauce behind their Black Swan strategy? And is this something the average investor should even consider? Let's find out. Universa Investments was founded in 2007 by Mark Spitznagel, a guy who seems to have a knack for spotting trouble before it hits. Interestingly, he had a previous venture with Nassim Nicholas Taleb, the author of The Black Swan, a book that basically changed how people think about risk. Their first hedge fund, Empirica Capital, didn't quite take off. But Universa started strong with $300 million under management,
operating out of a small office in Santa Monica, California. So let's break down this Black Swan strategy. What exactly does it entail?
Well, the core idea behind the Black Swan Theory is that unpredictable high-impact events are more common than we think. These events, like the 2008 financial crisis or the COVID-19 pandemic, can completely upend the status quo and catch most investors off guard. Universa's strategy is designed to not only survive these Black Swan events, but to actually profit from them. They do this by buying what are called out-of-the-money put options.
Okay, I have to admit, out-of-the-money put options sounds pretty intimidating. Can you explain that in a way that even I can understand?
Absolutely. Think of it like this. You're worried about your house burning down. So you buy insurance. You pay a small premium regularly. And if your house does burn down, the insurance company pays you a large sum to rebuild. Put options are kind of like insurance for your investments. You pay a small price for them up front. And if the market crashes, the value of these put options skyrockets, offsetting your losses.
So Universe is basically buying insurance against a market crash. But wouldn't that mean they're constantly losing money on these premiums?
That's the tricky part. Their strategy only works if the market actually crashes. Most of the time, those put options expire worthless, and they lose the premium they paid. But when a Black Swan event does occur, the payoff can be enormous, more than making up for those previous losses.
It's a high-risk, high-reward strategy then.
Exactly. It's not for the faint of heart. But it's important to remember that Universa isn't putting all their eggs in one basket. They have a diversified portfolio. And the put options are just one part of their overall strategy.
So their earlier venture, Empirica Capital, didn't do so well because the market was relatively calm during that time. No Black Swan events to trigger those put options.
That's right. Their timing was off. But Universa launched right before the 2008 financial crisis. And that's when their strategy really shined. They had purchased put options on the S&P 500 index and companies like Goldman Sachs and AIG, all of which saw their prices plummet during the crisis.
That must have been quite a moment for them, seeing their strategy play out in such a dramatic way.
Indeed. Their foresight led to returns of over 100% in 2008. And their assets under management ballooned to $6 billion in 2009. As investors, having witnessed their success, flocked to them seeking protection.
Wow, talk about being in the right place at the right time.
You could say that. It certainly put them on the map. But their success wasn't without controversy. There was some speculation that their large-scale purchase of put options might have actually contributed to the 2010 flash crash.
Oh, really? That's fascinating.
Yes, some people believe that Universa's massive bets against the market could have triggered a chain reaction that led to the flash crash. It's important to note that this is just speculation and there's no concrete evidence to support it.
Right. It's one of those intriguing what-ifs in financial history. So despite this blip on their radar, Universa continued to grow and evolve.
Absolutely. In 2014, they decided to relocate their headquarters from Santa Monica to Miami, taking advantage of Florida's more favorable business climate.
From California sunshine to Florida sunshine. I guess even doomsday preppers appreciate a good tan.
Well, they certainly seem to thrive in Miami. In August 2015, during another stock market sell-off, they reportedly earned a 20% return, which translated to a cool $1 billion gain.
$1 billion? Clearly, their strategy continued to pay off, at least when the market was feeling a bit shaky.
It certainly did. And their performance caught the eye of some big players, including CalPERS, the California Public Employees Retirement System.
CalPERS, the pension giant. What were they doing with a firm like Universa?
Well, in 2017, CalPERS hired Universa to provide what's called tail risk hedging for their investments. Essentially, they were looking for a way to protect their massive portfolio from those rare but potentially devastating black swan events.
So even a giant like CalPERS saw the value in having a bit of a doomsday prepper on their side.
It seems so. They recognize that even the most diversified portfolio could be vulnerable to those unpredictable market shocks.
That's pretty remarkable. So how did this partnership work out? Did Universa manage to keep CalPERS safe from any financial disasters?
Well, the partnership didn't last forever. In 2020, CalPERS decided to terminate their agreement with Universa, citing cheaper and better alternatives for managing their tail risk.
Interesting. I guess even for a pension fund with deep pockets, cost effectiveness is a major factor.
Absolutely. But even without CalPERS as a client, Universa's long-term performance has been quite impressive.
How so? Give us some numbers.
A 2018 Wall Street Journal report found that a portfolio with just 3.3% invested in Universa, with the rest in the S&P 500, yielded a 12.3% annual return over a decade. This outperformed both the S&P 500 alone and portfolios with more traditional hedges.
Oh, that's a pretty compelling argument for their approach. A small allocation to Universa seemingly provided a significant boost to overall returns. And of course, we can't forget their claim to fame. That incredible 3,612% return in March 2020.
Yes, that figure certainly turned heads. It was attributed to their strategy playing out perfectly during the market meltdown triggered by the COVID-19 pandemic.
That's remarkable. They really did seem to predict the unpredictable in that case.
It was a textbook example of their black swan strategy in action.
This is all so fascinating. I'm sure our listeners are eager to hear more about Universa's unique approach and whether it's something they should consider.
I agree. There's so much more to unpack here,
Yeah.
especially regarding the implications of their strategy and the long-term viability of their approach.
We'll definitely delve into those aspects in just a moment, so stay tuned for more on the intriguing world of Universa Investments.
Okay, so we've established that Universa's strategy seems to work, at least during times of extreme market volatility. But it also sounds like they're kind of all betting on bad things happening. Isn't that a little bit, I don't know, unsettling?
That's a question a lot of people have. It does seem counterintuitive to profit from events that cause widespread economic hardship. Some critics argue that it's ethically questionable to make money when others are losing their livelihoods.
Yeah, I can see that point of view. It's like you're not really rooting for the market to do well, are you? You're kind of hoping for things to go south so your investments will pay off. Right. It's a different mindset for sure. But Universa's argument is that they're providing a valuable service by helping investors protect themselves from catastrophic losses. They see themselves as a hedge against the unknown, a kind of financial safety net for those who are particularly risk-averse.
So it's like they're saying, hey, we're not causing these disasters, but we're here to help you weather the storm when they inevitably hit.
Exactly. They're not trying to predict the future. They're just acknowledging that unpredictable events are a part of life. And they're offering a way to mitigate the financial fallout.
That's an interesting perspective. But wouldn't that mean their success is entirely dependent on these black swan events happening? What happens if the market stays relatively calm for an extended period? Do they just sit around and twiddle their thumbs waiting for the next disaster?
That's a valid question, and it's something that even Universa supporters acknowledge as a potential challenge. If the market experiences a prolonged period of stability, their strategy might underperform, compared to more traditional investment approaches.
So it's like they're constantly walking a tightrope, balancing the risk of losing money on those put options if the market stays calm, against the potential for huge gains if a black swan event does occur.
Precisely. It's a delicate balancing act. And it's one of the reasons why Universa's strategy is not for everyone. It requires a certain level of risk tolerance and a belief that those unpredictable events are inevitable.
Makes sense. So it's not just about the numbers, it's also about your philosophy on risk and how you view the world.
Absolutely. Investing is as much about psychology as it is about finance. And Universa's approach definitely challenges conventional thinking about risk management.
Speaking of unconventional thinking, let's talk about the people behind Universa. Mark Spitznagel, the founder, seems like quite a character. I read somewhere that he's a goat farmer in his spare time.
He is. Besides his work in finance, Spitznagel owns a farm in Michigan, where he raises goats and produces artisanal cheese.
Wait, really? The financial doomsday prepper is also a goat farmer and cheesemaker. That's an interesting combination.
It certainly is. It speaks to his multifaceted personality
Yeah.
and perhaps his belief in self-sufficiency and preparedness, which aligns with his investment philosophy.
Yeah, maybe he's just hedging his bets in all aspects of his life. Prepared for a market crash. Prepared for a zombie apocalypse. Prepared for a cheese shortage. You never know.
Maybe so. And then there's Nassim Nicholas Taleb, the renowned author of The Black Swan and advisor to Universa. He's practically a rock star in the world of finance and risk management.
Oh yeah, Taleb. His book was a real eye-opener. He basically said that we're terrible at predicting the future, especially when it comes to those rare, high-impact events.
Exactly. His work has had a profound impact on how we think about uncertainty and the limitations of traditional forecasting models. His association with Universa lends a lot of credibility to their approach, since it's directly inspired by his theories.
It's like having the inventor of the parachute endorse your skydiving business.
That's a great analogy. Taleb's involvement is a powerful signal that Universa takes the Black Swan concept seriously.
So with their unique strategy, their impressive performance record, and the intellectual firepower of Spitznagel and Taleb, Universa has definitely carved out a niche for themselves in the investment world.
They have indeed. They've challenged conventional thinking and demonstrated that there's more than one way to navigate the turbulent waters of the financial markets.
Their story is a testament to the fact that even in a field as complex and often unforgiving as finance, there's room for innovation and unconventional approaches. But what does the future hold for Universa? Can they continue to thrive in an ever-changing financial landscape?
That's the million-dollar question, isn't it? Their success has largely been tied to periods of significant market upheaval, like the 2008 financial crisis and the COVID-19 pandemic. But what happens if the markets remain relatively calm for an extended period? Can their strategy withstand a prolonged period of stability?
That's something to ponder. Maybe they'll adapt and evolve their approach. Or perhaps they're content with being the go-to firm for those seeking protection. From the next Black Swan event,
Only time will tell. But one thing's for sure. Universa Investments has made its mark on the financial world, prompting investors and analysts alike to rethink traditional risk management strategies.
their story reminds us that in the world of finance, the unexpected can and does happen, and perhaps being prepared for those unexpected events, however unlikely they may seem, is the key to not only surviving but thriving in the long run. But what do you think? Is Universa's doom and gloom approach too much to stomach? Or is it a brilliant way to hedge against the uncertainties of the market? It's fascinating to consider how a firm like Universa, with its seemingly pessimistic outlook, can actually offer a sense of security to investors.
It's definitely a paradox, isn't it? By acknowledging and preparing for the worst-case scenarios, they provide a form of peace of mind that traditional, more optimistic strategies often can't. It's like having a fire extinguisher in your home. You hope you'll never need it. But knowing it's there provides a sense of comfort and security.
That's a great analogy. Universa offers that financial fire extinguisher. For those who are particularly concerned about those extreme market events, that can wipe out years of gains. So would you say Universa's approach is more about mitigating losses than maximizing gains?
That's a good way to put it. They're not necessarily focused on beating the market in the traditional sense. Their primary goal is to preserve capital during times of crisis, and any gains they achieve are a bonus.
It's a different way of thinking about investing, that's for sure. It almost feels like a philosophical approach to finance.
There is a philosophical underpinning to it, for sure. It's rooted in the acceptance of uncertainty and the inevitability of unexpected events. It challenges the idea that we can predict and control the future, especially in the realm of finance.
It's a humbling perspective, especially in a world where so much emphasis is placed on forecasting and trying to outsmart the market.
Indeed, Universa reminds us that sometimes the wisest course of action is to simply acknowledge what we don't know and prepare for the possibility of being wrong.
So, for those listeners who are intrigued by Universa and their unconventional approach, what would you say is the most important takeaway from our deep dive today?
I think the key takeaway is that there's no one right way to invest. What works for one person might not work for another. It's about finding an approach that aligns with your individual risk tolerance, financial goals, and perhaps most importantly, your personal philosophy.
Universa's story is a reminder that in the world of finance, diversity of thought and strategy is not only valuable but essential.
Absolutely. And it's a testament to the fact that sometimes the most successful investors are those who are willing to think differently, challenge conventional wisdom.
Universa Investments, they're not your typical investment firm, that's for sure. But their story is a reminder that in the world of finance, it pays to be prepared for anything. And hey, if you enjoyed this deep dive into the world of Black Swan investing, be sure to hit that subscribe button to get more priceless financial and business insights delivered straight to your ears. Until next time, stay curious, stay informed, and stay invested.